Good morning, everybody. Today is March 9th of 2021. March 9th, if anybody recalls, back in 2009 was one of the lows in the market. Actually, it was March 6th and March 9th. And so, today's the 8th. I take that back. So today's March 8th. Getting ahead of myself. I guess I remember when the market bottomed out on March 6th of 2009, and then March 9th is when it also bottomed out. Different indexes bottomed out at each day. But here we are, basically 12 years later, even though we're off, the indexes are off, we're still near record highs on a lot of the indexes. And so let's talk about what's going on in the world. Overnight, the futures had sold off by about 2% on the NASDAQ. The NASDAQ has rallied about 200 points from where it was this morning in overnight session, and then in terms of the S&P, it's rallied about 40 points, which is about 1% off the low. And I think the small caps were down about 1.5%. So everything's kind of rallied back from where they were overnight, even after the Senate passed. It's a slightly modified version of the $1.9 trillion spending bill that the House passed the week before. So they passed that on Saturday. It's kind of weird that they're passing these things on the weekend. I do find it somewhat bizarre. Usually these spending bills and big, very significant legislation like this would traditionally show up in the news cycle, but lately they've been doing it on days that people aren't paying attention as much, which is literally 2 Saturdays. So the House version was passed on a Saturday, and then the Senate version was passed on a Saturday. So it's just something to think about. We'll see if this is a larger trend that Congress is pursuing to try to change the narrative or mute the narrative and criticism about what they're doing. The futures sold off earlier this morning because of a so-called attack by Iran on a Saudi Arabian oil facility. Oil did spike, but now it's actually coming down a little bit. Now keep in mind that oil is probably up, I want to say about 7 to 10%, somewhere in that range, in the past two weeks or so. And then, part of this is because OPEC was cutting production, but part of it is, maybe Iran, if they did in fact attack Saudi Arabia, they had planned on doing this, they had planned on attacking, so maybe they were pushing up the futures market first, and that's why futures are selling off now. So they're trading on their own inside information. They figure, okay, we may want to, help drive up futures prices for oil because we're going to attack Iran. And, this type of economic warfare seems to be more common than it ever was in the past because these players have a slightly a higher level of sophistication because they hire people that know how to, at the margin, push things up. Okay, so that's why oil kind of spiked overnight. Futures took a hit, and now oil has sold off from where it spiked on the news, and futures have rebounded. So maybe those two are tied together. And you never really know. Sometimes these relationships hold, sometimes they don't. But what I do know is that the VIX did go up by almost, I think, 1.5 points or so. So the volatility index on the market is about 26. Keep in mind, it peaked at about 66. It closed at a peak. Probably intraday was probably higher a little over a year ago. And so it's down from 66 to 26. But for the previous 5 to 10 years prior to that, it probably hovered around 12 to 13, 12 to 15%, 12 to 14%. So right now at 26, it's still extremely high. So there is a lot of concern, okay, that we have some choppy waters ahead, and it's reflected in the volatility index of what people have to pay for protection if they're buying puts. And if people don't want to buy stocks in the cash market and they buy options instead, that's going to push up the VIX as well. And so there's definitely seems to be a lot of concern still pricing in the volatility index. If you use that as a measure to consider what is the sentiment out there with real money being put to work. And so it's not just he said, she said kind of thing. It's like, okay, real money, probably hundreds of billions of dollars is being put to work, in various options markets where people are concerned about more downside risk than upside risk. And that's why puts tend to have a higher volatility priced into them, is people are more concerned about losing money than making money. And so, what's interesting about this is there's a hedge fund manager named David Tepper, super successful, from Appaloosa Management. I think he was on CNBC today. He's worth like $12 billion. I think he's had a few years where he's made well over $1 billion a year. And the deal with him is he's pretty insightful at times, and I think he's obviously been spot on. Otherwise, he wouldn't be worth so much money. He thinks that interest rates are stabilizing. Only time will tell, and that he thinks that the economy is on solid footing. We obviously have fiscal stimulus. We have monetary stimulus, which tend to be bullish, which I agree with both those assessments, that both tend to be somewhat bullish because they're goosing the economy, and that, he thinks we're going to have a good environment possibly for stocks. So once again, time will tell. But in terms of, one other thing to consider with that is, the wage growth that took place last week with the numbers that came out. Is it a one-time event, or is it a multi-month event? And that can really change inflation expectations significantly, as well as the cost structure. And so, whereas I understand what he's saying, that it feels as though interest rates are stabilizing, the VIX is telling you something else, because the VIX is up today. Part of it might be on that attack in Saudi Arabia. So, this is what makes a market, folks. Somebody thinks this is what is going to happen. Somebody else thinks this is going to happen. And then collectively, everybody's independent decisions kind of push asset prices to where they think they should go based on all these aggregated risks and expectations about the future. Now, keep in mind that it's a tough thing, because the VIX will fall as stocks are going up, and risks is people are less concerned about risk. So it's kind of like, how do you catch that? That's the really big question as an investor. How do you take advantage of that relationship in which the volatility is falling and then you're making money as stocks go up, because people are less concerned about risks in the economy? Okay, keep in mind the VIX less than a month ago, on February 12th, was at 20. So the VIX has actually gone up 6 full points as of like right now. So for the volatility index to go up 6 full points, or 30%, that's signaling something, and only time will tell exactly what that is. I mentioned the Microsoft hack that took place on the same day of I think it was January 6th, where I guess some event took place in DC. Okay, January 6th. Everybody knows what that event is, and the Microsoft hack by China, get this, impacted 60,000 small and medium-sized businesses. So the Microsoft hack on Outlook, which is the email servers, was literally hitting a lot of the small businesses and medium-sized businesses across, I think it's not just the United States, but across the world. Now, what's interesting about that 60,000 number is, since China entered the WTO, there's been over 60,000 plus factories that have been closed in the United States. And so there definitely seems to be a fascination or playbook, not fascination, that's the wrong word. The Chinese are definitely, the corrupt Chinese Communist Party, not the people of China, is definitely looking to continue to undermine the United States and our sovereignty, and in particular, attack the entrepreneurship class. If you think about what happened with the virus last year, most of the businesses that have been impacted are in the small and medium-sized range. So now you have all these impacted businesses that have been suffering for a year. And then right upon inauguration, they launch an attack on software that a lot of these small and medium-sized businesses use to communicate with their clients, their customers, their employees, because Outlook is so prevalent. And so for those of you who don't realize, and I think most people do, that we're in the middle of a war, an economic war, a spiritual war, you can say a physical war in terms of our bodies are under attack. and that's why I do some of the math on losing weight clips, because since this whole thing started a year ago, we're all, on average, I think the average American has probably gotten more unhealthy. And so our physical well-being is under attack. Our spiritual well-being is under attack. They shut our churches down, or I guess synagogues, all these other religious institutions have been shut down. Economically, we're under attack. All the entrepreneurs are under attack. And, it's disgusting that we have to deal with all this, right? But the reality is that that's the nature of war. And the nature of war has changed. It's less, one other thing, our identities have been under attack. So a lot of companies as well as foreign actors have been harvesting all this information about us and trying to figure out how to weaponize it to take advantage of us through psychological warfare. And some companies do it to just sell more stuff, but other people are more malicious than that. And so that's another part of this whole equation. But what I want to point out is, some people have been asking me, Bobby, what do you think about the currency markets? Or is the dollar going to collapse? Or is the United States going to collapse? Should I put all my money into gold and silver? Should I put all my money into cryptos? And what I would tell you is that, number one, I don't give any advice on any asset on any of these broadcasts. But I will provide information about what you can think about. Now, that's different for clients. And what I would advise people to do is find a professional that you trust. Don't use information that's free on the internet to be the end all be all for you making decisions. I think that's a little silly, because you might be missing some of the fine print and some of the details as to why somebody said or did something. So make sure you find somebody, unless you're that somebody that can you really understand your own capabilities and that you can make that judgment call from years of experience and observations and keeping up with these things. Okay. So with that being said, I do not believe the United States is going to decline as much as everybody thinks it might. I think our best days are ahead of us. And I just happened to look at what the 10-year bond was at in the U.S., which is, it's been about 160. It was at 157 last Friday. It's at about 160, 159 or so today, 1.59% yield, to where it was, I guess a couple days ago. It just spiked from 1.4 to 1.59 in the past week, 2 weeks. But I decided to look at Germany, and Germany is the bellwether of Europe, and it's the most efficient, most productive economy in all of Europe. And it's been that way for quite some time. So I decided to look at, okay, well, how does the euro look in Europe? Because the euro is the currency of Europe. And it's a weird system over there with the euro. And the reason why I say it's weird is because they don't have a federalist system. Like the United States is a federal system. So each state has to pay in to keep the federal union together. And so there's stabilizers in place where federal money gets collected through the form of federal tax. And I know there's a bunch of people that disagree with the idea of federal tax. I'm not here to talk about that conversation. We can have that later. I do think that the number is far too high, and the amount of federal taxes collected should be cut in half at a minimum. So I'll leave it at that. But I'm not saying I'm not going to make the argument it should go to zero. but I definitely think it should be cut in half. And there's ways to do that. But with that being said, this money that gets collected by the federal government, it gets doled back out to the states in the United States. And depending on what's taking place, some of the states that are doing a little better give money to the states that are not doing as well. Okay, so it's a little bit of a subsidy, and that's why there's a big knock against federalism. Well, when you go to Europe, they want to call themselves a European Union, kind of like the United States. Heaven forbid they said United Europe, because they would make it sound like the United States. But this European Union, they don't really have as strong of a mechanism to make sure that each respective nation state gets the benefits of a federalist system. I know they've been piecemealing it and working on it, but it hasn't done so well. And so I just decided to look at what the bonds in Germany are, and the bonds in Germany are negative 0.3%. So you sit there and you think about that. Wow, Bobby, the rates are negative 0.3% in Germany, and they're 1.6% in the United States. That's a 1.9% swing. Now keep in mind, on $1 trillion, that's a lot of money. That's like 19 billion. 10% of $1 trillion is 100 billion. 1.9% would be $19 billion. So 19,000 million. Okay, that's a lot of money. So what does that look like over time when you do that? Well, if you go back to the financial crisis back in 2008, which I just mentioned on the March 6th and March 9th of 2008, I was just looking at what the euro was at back in March. And I just pulled up March 28th of 2008. And the euro was at 1.58 to the dollar. So that means that we had to give them $1.58, okay, US dollars, to get 1 euro. So that's how much it cost us to buy a euro. Now, if we look at it today, we only have to give them $1.19 to get 1 euro. So you sit there and you're like, wait a second, Bobby. Before we had to give them $1.58, and now we have to give them $1.19. Did our costs go up or down? The answer is they went down. How much did they go down? Well, they went down by just about, I think about 24% or so, 24, 25%. So what does that come out to per year? How much did the euro fall in value since 2008? And it turns out that the compounded annual decline is 2.16%. So I just told you it was a 1.9% spread, but the value of the euro has lost 2.16% per year for the past 13 years. That's how much it's fallen. So let me say that again. The currency has declined by 2.16% in Europe for all people for 13 years in a row. So when I hear these sayings that the United States dollar is going to collapse, the U.S. has lost its way, it doesn't look as though that's happened. The European Union is bigger than the United States, and meanwhile, during this entire time, it has continued to fall for 13 years in a row. Why? Because socialistic, communistic policies of Europe have shown time and time again not to work, and they destroy wealth. And so I know there's this push and this urge for some of us, some of the people around us, especially some of these corrupt politicians, to push for socialism and communism. But we have so many examples around the world of how your quality of life and your standard of living will fall if you pursue those types of policies indefinitely, because everything is a relative game. So if you're worse off now, if you wanted to move from Europe to the United States and your currency fell 25%, it's going to cost you a third more to move here today than it did back in 2008. Think about that, a third more. And so I want you to think about that when you hear all this stuff about all these other currencies and why you need to get into them. Because a currency is supposed to reflect what the exchange, the medium of exchange is within an economy. And so what matters to that is how productive are the people of the economy, how many people are working in the economy, what is the true growth and upside of the economy. And clearly the United States has shown time and time again throughout not just this past 13 years, but going back probably 50 years or more, 100 years, versus Europe, that it has its stuff together better. Like we have our stuff together and our act together better than Europe does. And I think that's something that makes me happy from the standpoint that we still have a lot of things that we could be building off of and making sure we don't give up if we properly make the argument for why the best parts of the U.S. system are still there. We just need to chop away some of the dead wood. A lot of the dead wood is corrupt government. And so I just wanted to point that out because there aren't a lot of news stories this morning aside from the Senate stuff. But I figure because of what's going on with interest rates and then what's, the past week and then what was taking place with regards to oil, I would talk about it in the context of the second most traded currency in the world, which is the euro. And so, please keep that in mind when you hear about how everything's going to collapse in the United States. I got news for you, folks. If the U.S. dollar collapses, as some people try to claim, the whole planet's going down in flames. Like it's not going to be pretty. And I would never call for that. I don't believe that will happen. I think that it's foolish to try to base your life's decisions on putting all your chips in that direction. Does it make sense to put some chips down to hedge your bet? I think that that's probably prudent. But to go overboard and overshoot, it's like being worried that, you cut your hand or you got an infection on your hand and for some reason you think it's going to turn septic. And so instead of going to the doctor and finding out more information or waiting to see what's going on with your blood work, you just chop your hand off. I don't think that's a good idea. And so I think sometimes these people online and some of these other people on various boards, they go and they shoot their mouth off about these things without any context of history, without any context of what's taking place in the global economy. And part of this whole thing with what I'm trying to do with these videos, about what's going on in the market and explaining these concepts is to hopefully give everybody a little more, just a little bit of more information than they had before that they can go and explore it, think about it, look into it, so that they don't accidentally make foolish mistakes for their own money, and so forth. So with that being said, I will see you guys later on this afternoon if you chime in about 4 p.m. Thank you so much for listening, and I hope you guys have an outstanding day. Take care.